Hi traders, I want to show you an example of a bearish bat pattern that's set up on the euro yen, the pattern set up on the 1 hour chart. And I just want to show you the weekly chart I'm currently looking at. You can see that prices come up to a very key area of resistance up here. I'm going to show you what it looks like on the weekly right over here. You can see our price is held previously as support, becoming resistance. We've had a big spike up into this. You see this little block right here, this bullish candle, rejected heavily, and then back up. We draw our Fibonacci tool from the high right down to the very low. You can see that 50 level as a reference point rejecting. Look at the rejection in terms of the weekly candles here. Okay, so that's the large picture. On the daily chart, just compress this, you can see this key area of resistance where we came up to. Have a look at, you see this little block here, this bullish candle. Price drops, rallies, heavy rejection, and now we back up. You can see 1, 2, 3, still signs of rejection. Look at the heavy selling off here. Okay, we are in a big uptrend. You can see high highs, high lows, but key resistance. All right, so if we move over to the 4 hour chart, you can see here we've rallied, made like a double top here. See this block right here, last bullish candle, big drop, comes back, retest resistance, and we start to sell off. Now the pattern itself set up quite nicely on the hourly chart. You can see we start to make low highs, lower lows. Okay, once again coming off that higher time frame, key area of resistance. Okay, you can see here as well. See this last little block on the hourly, see that last bullish candle right there. Price comes up, tags it pretty much to the pip, and then we release. Okay, so once we get that release, we're going to start looking for possible patterns. Okay, so if we draw our fibs from the high down to the low on this hourly chart, see our price rallies up like this, hits the 38 level, and then rejects. Actually, have a look at that last bullish candle there, rejects itself. Okay, once we get that rejection, we want to take our Fibonacci tool and draw it from the low up to the high. And you have a look right here, you see the 886 with that 2.0 extension or projection. Also have, you see this, we just take a horizontal line, you see this block here, the bullish candle right there. We've also got these wicks, another wick here. So around, you see that 886 is at 96 area, and we've got that block around what is it, 91. Okay, so we're looking for a sell. If price gets up there, a sell around the 91 level, which is like 5 pips below the 886 area, with a stop loss above this high. Okay, so it's, you know, it's about 40, it's rounded to 40 pips. It's about 40 pips of risk, but have a look at the large swing here from the high down to the low. It's a 250 pip swing. Okay, so 40 pips of risk is not that bad if you look at the overall size of the swing. We just follow price along here. We want to see this high taken out before we start looking for orders, placing orders. Remember, this is an hourly chart. Okay, so it takes a good while for this pattern. You see how the pattern sort of starts with this drop on the 27th of March, comes down, forms a bottom 29th. So, you know, if you're working full time or you want to take a sort of a slower approach to trading, these patterns, you can trade them for, you know, swing trade these patterns, and they set up over a good few days, so you don't have to be stuck in front of your screen all day long. So we just go to our platform now. Once we've had that high taken out, remember with these patterns, remember if you label them, you've got X, A, B, C, and the D point is the completion area. Now with a bat pattern, this rally from C to D can be very aggressive, so you want to make sure that your order is in way before time. Okay, so here again we'll put a sell limit at 110.91. okay, just below that 886 area, with a stop loss above, so we said 40 pips. Here again, you can alter your risk if you want to. I'm just going to keep it really simple with a 1 lot. Now in terms of take profit, here again I'm going to place the trade and then we'll see in terms of where we're looking. You see this area stands out straight away. It's 109 80 area resistance, support, resistance. So let's just put that in the platform. There's the order right there. Okay, you can see how we have that level right there. Stop above the high. Let's just have a look, step back quickly, have a look at the 4-hour chart. So we take a horizontal line, drop from the high down to the low. You see that area that we identified on the hourly. Real key level, you see that. Resistance, support, spikes through, holds. Then slightly lower, you see how we've got this block right there. Okay, that's essentially where the orders start to accumulate. Okay, so I'll be watching around this level right here, between 86 and 67, to take partials and then see if we can have a run down towards the lows at least. Okay, and if we have a look at the lows, I'm just having a look here. You see that you got this block here, comes back, we test, come back, we test. I've tested this a good few times here. We just compress this. Okay, each time price comes back, you're just filling orders around these areas. So the more times it's starting to come back on quick succession, the fewer orders have time to accumulate there. Also got this little trend line here you can keep an eye on. So let's just go back to the hourly chart and step this forward. So price is starting to surge out of that. As I said, you want to be ready with your order. Okay, so we've actually spiked up into that level. A little gap. This was on the weekend. Okay, we gapped up, rejected, and then you can see a big move up. Now you see this big bullish candle. This is going to scare a lot of people out of these sort of trades. As I said, you've got to be prepared, be well in advance with these patterns, because this last leg is normally very aggressive. Okay, step this forward here. Okay, so we're starting to break down a little bit here. Broken through the first area. See this little block? We've broken through that. We want to come back and fill this gap. Minimum requirement now for us to start getting anywhere with this trade. Remember, hourly chart, see it spikes back. That's why I say be cautious about trying to just move your stop to break even. Okay, once we've had, you see this rejection, this wick release like this, and now start to move my wrist down a little bit. I'll bring it above this high, 111.14. We're up 38 pips. So 111, what did we say? I think we said 14. So just above the high. The reason I can now bring that stop is because we can see we've got low, high, lower, low. With this rejection candle now, I like the sign of that. Okay, see this block here, price is now stalling right there. Just follow this along so we get the bounce. We've also, you see this area here, we've got this area now to protect us. You see this area here. So if price spikes back up, if you want, you could even add to your position. We haven't gone into that in any detail, but nevertheless, you've got this area to protect you. So we now start to release to the downside, and you see this area, that's the first level I'm interested in terms of taking profits. Let's just have a look at that 4-hour chart. Actually, I just want to get rid of these fibs so it's not looking so messy. So this area here is essentially the level I want to eye out. We can actually modify this trend line a little bit better. So this block here, we've got the trend line horizontal, support becoming resistance, back to support. Also, have a look at your fib swing up from the low up to the high. Just see where you are in terms of fibs, coming up to the 38, the 50. See that 62, nice confluence around that area. Up 60 pips. You still have some risk in the trade. As I said, I'm not, I don't want to be overly aggressive. Everyone's going to do it differently. With these bigger patterns, I like to give them a bit of breathing space. If we have a look at the 15-minute, okay, we can move our stop down a little bit, just above this swing high. We've also got this area here protecting us. Okay, so I think I stop above here now. Let's call it 110, 110.97, 98 area. Price really shouldn't get back up here. Okay, if it does, you've got some problems on your hands regarding the trade. Okay, but here again, we want to just be objective as price moves. Like I said, you can move it down to this area here. I'd like to see price start to release a little bit and commit below here on an hourly chart. Just have a look at the hourly now. Okay, so we've actually closed below this area. You see that spike? We've closed below that area now. And we've got this area here. So we've got this level here. See this last bullish candle? You've got that as protection as well as this area. So I'm going to move the stop down now. Lock some profit in on this trade. We're up 75 pips. So you see this high here. We'll move the position stop down to let's call it 67. Modify. Okay, so we're locking some profit in on the trade. Just step this forward. Okay, so price is now moving down into this area here. Okay, so we're starting to get into this area. This is where you could start expecting some sort of buying pressure coming in. Okay, so we can up 100 pips. So what we can do, we can actually look at taking off part of the position. So we'll take half off there. We're coming into this area here and the 50 level. Step it forward. Okay, so still selling pressure. So this was the initial area that was eyeing out. We've got some news coming in, obviously here with this big drop. Okay, shift in sentiment. Price moving down quite aggressively here. You see that trend line getting retested. Let's just have a look at that hourly chart. Okay, big drop off here. Okay, now in terms of moving the rest of the position down, okay, we're up 157 pips. We've got part of the position off stop, or the rest of the position sort of up here at the moment. We've got, in terms of barriers, have a look here, we've got this area here, you see resistance, we've got support, we've got resistance, big close through that level. So we could watch around these highs maybe here. You see this area here. Also price comes back, flips through maybe just sort of above this area. We could maybe get our stop down to that area and just lock some more profit in. You see this little block here, 104. I think let's move the stop up to or down to 110.10. There again, guys, there's no black and white rule here. If we retook this video tomorrow, we'll manage the trade slightly different, because you're going to just have a different sort of frame of mind as well. Okay, so as long as you're sort of focusing on what price is doing and not just get out for the sake of getting out. Okay, it's the worst thing you could ever do, is just take profits for the sake of taking them. So you see how we're coming down to this level here. We've got a block here, 79, a likely place to take a bounce. Okay, we're up quite a nice package here. We'll just step this forward. Price still moving quite aggressively. You see the spike. Look at the rejection of the 886. Okay, gets rejected again. Okay, coming down to this key area and these lows. Just have a look at that 4 hour. In terms of looking for a big runner, okay, you see these lows here. Be cautious about this. We've come down to this area a good few times. Okay, this is where you can expect buying pressure to come in place, especially after a big move like this. You're going to see take profits coming in place. You can see, after these big moves like this, take profit after big move, take profit after a big move, take profit. So around this area is where I would look to now close that position off. Up 170 pips. Remember, we're at 40, so it's not a bad deal. We've got this swing high here. What I'm going to do is just move my stop to just above this swing high. So 109.67 I think is the area I want to move that down to 109.67. Okay, we'll see if you can get a big runner. You know, sometimes you're going to get a shock in the market, and this is why you also want to be following that your live news feed. Okay, see what's going on. So price is now hitting this. You see this area on support here. Big spike in. Let's just follow price along here. Okay, profit taking as normal. See, price comes back, hits this little block here. Let's see what happens. So price having a run at the lows. We want to see it clear through this area now. We want to see this level hold. Let's just move this down. I see this. You see how we have resistance support. I'd like to see that area hold. Got to stop. We can move our stop just above this high here. What is the high here? 57. Let's move it in at 61. Just lock some more profit in there. Starting to build this sort of base here, so we can quite easily pop up. And ideally, you'd like to see a run down at the lows. If we have a run down now at the lows, we'll be sort of forming a double bottom short term, so probably look to take some profits. Okay, so there's your spike lower now. Okay, let's just have a look at that hourly chart. We're now running in at these areas here, and see this level down here. I want to watch this very, very closely. If we start moving back above this area, I want to be out of there. Okay, so there's your spike up, and this is now starting to take some profits at these lows. So I think we're going to bail on this here. Let's just see. Yeah, still moving higher. Finding a bit of resistance. Let's see if we can get a little move off. See resistance. This wick here. See that level hold. And also, you know, have a look at the time of the day here. You know, if you're sitting up watching this, it's pretty late in the session. Okay, see the spike up here. Okay, so this is sort of the area here you want to be looking to take profits. And if we get back to this area here, I would like to bail on this trade. Not doing it for us. Coming back, testing. Okay, so we're now closing above this level. I'm going to just close this position here. Resistance becoming support, and if it's going to rally from here, but okay, so that's essentially how I'd look to manage the trade. Okay, eventually it starts to move higher. So that was a big bearish bat pattern. I'll just show you the trade. We took 104 pips on half the position, and then we took the remaining 157 pips on the other half. Okay, so a nice little trade there. Big move down through these key levels. You can see it comes down, tests those lows, picking up more orders, little false break, and then we move back above. Alright traders, want to show you an example of a bullish bat pattern that's set up on the Euro Yen, and the pattern actually set up on an hourly chart. Before we even start looking for patterns, we want to look for higher time frame key areas of support and resistance. So currently looking at the daily chart here, you can see we're in a very nice uptrend. You can see higher highs, higher lows. Okay, we are currently up. If we just pop a line across here, up an area of resistance here. See this little block on the left hand side. Okay, see that block there, we've rejected, come back, rejected, but have a look at the strong move up. Okay, very much in an uptrend. We've obviously tapped this level here, but have a look at this swing here. When we're in a very strong uptrend, okay, when you start looking for Fibonacci swings from these big swings up like this, from the very low to the very high, you're very, very seldom going to see price move back, okay, to your 38, 50s and 62 when you're in such a strong up move. So what you want to look at is the smaller swings. Now if we have a look at this swing low up to this high, if we looked at this on a 4-hour chart now, you'll see a very nice upswing. Okay, now have a look at this. Price retraces, comes down to the 50 level. If we take a horizontal line and we take it from this swing high and we just work it down, have a look at where price is stalled out. You see the 50 level here? We just zoom this up, see the 50 retracement, and then we've got this very nice level of resistance. See our resistance, it breaks, closes above, comes back, retests the level as support, then rallies and then pulls back to the 50. So a key area of support down here. This is the area that you want to start looking for buying opportunities. Now we've always come down and had a very nice reaction off the level. You see back into resistance. So overall we're in a big uptrend. We've hit resistance. Okay, prices dropped, come down to a key area of support, rallied into resistance. Now if we move down to the smaller time frame, actually let's just go to the 4-hour chart and show you that's what that swing looked like. We just compress it. You see this is quite a major swing up on the 4-hour. Okay, here again, I'm not interested in these smaller swings. I really want to see the large swings that stick out. Okay, see that area comes down to the 50, and you have a look at this block here. Okay, this is where price really released to the upside. See that last bearish candle, then bang, up we go, comes back. So this is an area right here you want to look for patterns. Okay, as well as up here, you can see here we get a nice reaction, comes right back, retests, rallies. Now the pattern set up on the hourly chart, I'll just step this forward. So from the very low up to the high is a big swing up. Okay, so you can see essentially we're trading in a range here. There's the uptrend. Okay, that was a resistance. We drop, rally, okay, back to resistance. Just adjust this fib level. Now you see our price is starting to drop down to the 38 level. So once it starts hitting a 38 area, minimum retracement, you want to take a Fibonacci tool and drop it from the high down to this low. Okay, we just step price forward here a little bit. Okay, now the bat pattern is a minimum of a 38 to 50 to sort of in between the 50 and 62, and you're looking around the 886. In terms of the actual confluence, you see the 2O doesn't quite line up with this 886 area. The other way you can also learn to draw it, and this is how a lot of guys will teach it, from this swing low up to the high to this retracement. You'll start looking at these deeper extensions or projections. Okay, so either or, as long as you're sort of getting confidence, but as I said, the structure of the pattern is the important one. So minimum of 38. Okay, if it starts to bounce, then I'm looking for a drop down to 886. If it comes down to the 50 or in between the 50, also I'll look to that 886 area. And the Gartley, I want an exact bounce off the 618, retrace, and then look for the entry of the 79. Okay, so very specific in terms of the actual retracements from this upswing. So this is the X, this is the A, and now we're starting to retrace, and we just move this forward. See our price actually comes up, or sorry, comes down to the 50, and then it starts to rally. So we drop your fib from the swing down. Okay, here again you see where the 1618 is lining up with that 79. Now that's not an official Gartley pattern. Okay, the Gartley should really come down here to the 618, but as I said, everyone's going to do it slightly differently. If we have a look at this measurement from the high down to the low again, just have a look here. You want a minimum of a 38% retracement, okay, from this swing here. And I just want to show you in terms of the bat pattern from this swing here. You see the 2618 coming in with that 886. Okay, that's the way Scott Carney will teach the pattern in terms of the actual projections. I like this larger swing. Okay, I find a lot of people pay attention to those swings, but I just want to make sure that you guys are aware of the differences. Okay, so in terms of the actual completion of the pattern, this is the area here, 886 level. Okay, if you want to look at that 79, that's also absolutely fine. Just make sure your stop, okay, is below that low, and you can see the difference. It's basically 10% more in terms of the actual stop, okay, between the 79 and 886. So just be aware of that difference. Okay, so if we have a look at this 886 area, 2618 projection extension, that's the completion point. We just step this forward. Once price breaks this low here, you want to start looking at putting your order in. As I said, remember this last leg down, okay, is where we want to start putting our order in, and you want to be very quick on the draw here in terms of putting that order in, because price on this last leg normally with these patterns moves very quickly. Okay, so if you label this point down here is X, this is A, price would drop down to B, rally up to C, and then this projection down would be the D completions area. Okay, so basically I just keep it really simple. If it's a 38 to sort of in between the 1562 or 618, I look at the 886 for the bat. Okay, if it's a 618, I look at the Gartley. Okay, so pretty straightforward. Now we get over to our platform, we go into our new pending order. So we want to put a buy limit. Okay, now the level you can see down here around 108.80, and I want to add a spread of 3. Let's go 85. Okay, so a good few pips above. You don't want to be missing out on the trade, and a stop loss below here. So it's going to be about 40. Let's move it down to 45. Okay, it's quite a large swing. If you have a look at this measurement up, in terms of taking profits, remember, let's just put that in there for now. In terms of taking profits, just have a look at this swing up. This is 270 odd pips to 75 pips. It's worth risking 45 pips. Okay, if your overall swing is large enough. You can always look to fine tune on the 5 minute, but as I said, this is a 1 hour pattern, and for you guys that don't want to be in front of the charts all day long, or only got a few hours in the day, you can see this pattern takes a good sort of week to set up. Okay, in terms of targets, again, we just want to mark out some areas. We've got this area in here. You see how we have support in here. Actually, sort of moves over here. Support, resistance, support. Price having a go now. So that's sort of the first major area. We've also got some areas here, but let's just have a look at the 4-hour chart quickly. Can't really see much here, but all the fibs in the way here. But have a look at this area here. See this level in here. We have very nice clear level. We have resistance, support, resistance, holding as resistance, closes above, comes back, test support. Okay, so not a bad level, and as well as these highs up here. Okay, so around that 110.88, that would be a final target. A partial profits would probably be this area here. Okay, this is pretty a key level here. See how price flips across from support to resistance. So you'd be looking, if price filled, you'd be looking about 100 pips, give or take, to the first area, and then further up to that final area about 200. Okay, so we just go back to the hourly chart, compress this. Okay, it's a real big swing here, and this takes a lot of time. Remember, this is an hourly chart, so each bar here or candle takes a whole hour. Look at this big move down. Okay, this is very common for price to move down like this. So here's the 79 area. Okay, here's the level you could look to take a trade at if you wanted to, but as I said, with the bat pattern, you're looking deep at that 886 area. Okay, see a little bounce there. Price now surging deeper. Okay, see it pops up into resistance. Now price surges deeper into the 886, so that pattern's actually filled. You can see a little bounce up, 4 pips up. So now we want to actually manage the trade. I'm going to get rid of this level here. So the first area, just move this down. You see this block here. Okay, that's a pretty important area we want to pay attention to. That's, what is that in terms of, it's about 96 pips. Okay, so I want to look at that area right there for a first target if we get up there, and then second target possibly up towards these highs here. Step this forward, again, a little bounce. See our price, I'll just zoom this up here. You see our price pops up, comes back, retest the block here, support, rallies, comes back, see the close above, comes back, retest. These are little scalps that I also like to take right here. See the close above, come back, retest. These little blocks here on the hourly chart. So price is starting to pop up now, and I'll sort of move to the smaller time frame, 5 minute. I want to look at taking partial profits at this area here. Step this forward a little bit. Obviously got this level in here as well. So price moving up into this area of resistance. Okay, so we have come up here, so what I'll do is I'll reduce the stop loss to break even now. Still looking slightly higher for a take profit. You could, if you wanted to be really aggressive, and move your stop to below here. Okay, but this is really micromanaging it, and I'm not a huge fan on these big patterns, okay, because when price moves up aggressively like this, it can quite easily come back and test sort of these blocks in here. Okay, so just be patient. I'll step this forward on the hourly chart. Look at that big spike down. Okay, now that big spike is very common occurrence when price rallies like this, comes up to resistance. As I said, you know, you can look at these levels to take profits. I'm looking slightly higher here. So here's the drop, comes back. You see how we have just falling short of this area here. Okay, a little block in here. This is a possible head and shoulders pattern. See this area? Coming back, testing this area of resistance, becoming support, big move up. Okay, still looking at that first area there. Slightly higher. Okay, bit of rejection here, or false break. Okay, so there's the area there. Like I said, if you can put a limit order in your platform to take profits at that area, then take partials off right there. So I want to close part of the position, and I'm going to close half the position. Okay, and we're at break even. So now we've got an open look, nice rejection here, open look further up, and I really like obviously this area in here and this area here. I like this final target. I'll maybe move this down slightly. You see this rejection here? I like this 110.78 area, so that's where I'm going to put final target. I think I just want to drop my fib from the high down to the low. You can see that rejection off that 38 came off resistance here. Okay, that pop price down. I was looking at this block, this area right here. Okay, price very often feeds back into that area before we reject like this. So, you know, that's always a choice you're going to make. I haven't gone over this, you know, beforehand and trying to sim trade this perfectly. So I hope you realize that. So now we're looking further up, even the 79 area, see just below here, this is a major fib area. So we could even come down a little bit here. You see this level? Here again, I'm using the fib as a reference. So we have resistance, we have support, rejection, closes back, comes back, retests on this wick here. So 110.68 area, I'm going to modify this. 110, I'm going to go a few pips just below that 79 level. So let's go 65. Okay, remember you're going to compete with sell orders around this level, so I want to take my profits just before that area as well. So I'll just step this forward. See that spike up into that area? Okay, that's what I was looking at, this move up here. Now we reject. Okay, see how we're coming back here. This level here holding as resistance. Here again, you want to scalp these levels, you can do that as well. Okay, now we're getting a pop up. You see how price comes off this block here. Okay, little pop higher. Okay, for a base. You see how we're just building this base. See, we spiked this level. Now that we spike, you see how we spiked in this area a good few times. These orders should pretty much get taken out. You see how this high here takes out this high, just filling more orders around this level. look for commitment above this area. Okay, so now we're getting a little bit of commitment above, and if we can get a retest, okay, on short-term traders will look for momentum at these areas. So now we're starting to release to the upside. You can see it doesn't even come back and retest that block. Okay, so pretty good in terms of strength. Moving the stop up now that we've started to release nicely, I want to move my stop, but I'm not going to be overly aggressive. I'll move it to just below this. You see this swing low here? So the swing low is 23. Let's move it down to 20. And we'll lock some profits in on that next position. Okay, if price now returns and makes another swing like this, then I can get the stop further up. Okay, just step this forward and see what happens. Okay, so there's an actual gap up. Okay, position was held over the weekend. You may want to just liquidate this on a Friday. There's your gap up, and you can see price actually moves further up there. Okay, so overall, if we just have a look at the account history, we took 98 on part of the position, and we took 180 on the second part of the position.